Thank you for joining us. I hope you're having a great Monday afternoon. Today's webinar is titled Identifying Your Risks in 2020. Your contracts are under greater scrutiny from consumers and clients than ever before, and a single mistake could potentially destroy your company. We know that electronic security and life safety installation and monitoring companies face significant risk each day. Injury to workers, fleet accidents, property damage, and lawsuits can all impact day-to-day operations and bottom lines. This is why ESA created an insurance company, Security America, offering A-rated policies. In this webinar, you'll learn about the liability risks you and your company will be faced with now and for years to come. You'll also understand why Ken Kirschenbaum recommends ESA Security America coverage to companies all across the nation, and why Security America recommends Ken's contracts as the gold standard to low voltage business owners. Lastly, we'll discover how to safeguard your company and mitigate these risks with the proper coverage, preparation, and know-how, featuring Security America's Crystal Jacobs. I'm Jillian Bateman, and I'm ESA's Chief Development Officer. I'll be facilitating today's webinar, joined by my colleague, Sofia Dominguez, our Business Development Executive specializing in membership. I'm going to hand it off to Sofia in just a moment, but before I do, I have a few practical housekeeping notes for you, especially for you first-timers joining us today. First, all callers will be muted for the duration of the webinar, but that doesn't mean we don't want to hear from you. If you have a question at any point during the webinar, please click at the bottom of your control panel, that Q&A icon, and type it in there, and we'll be sure we save enough time to answer your questions. We'll also be recording today's webinar, so you can rewatch the on-demand video at your leisure. And finally, in your control panel, you'll see a window for slide content and a window to see speakers sharing video. You should see us here. At any time, feel free to double click on the window that you'd like to make larger so that you can see that content larger. We at ESA realize your time is valuable, and we appreciate you spending some of that time with us today. Without further ado, I'd like to introduce to you Sofia Dominguez. Sofia is both personally and professionally driven to impact her community, utilizing her extensive resource management experience to help others exceed their own expectations, and more importantly, thrive amidst an ever-changing market. She graduated from Texas Tech University with a dual degree in psychology and philosophy. She is skilled at finding creative solutions to complex problems while strengthening multifaceted networks of people. Outside of the office, she enjoys camping, hiking, and taking her dog Peanut on road trips.
Hey, thanks, Jillian. So I'm really excited to be here today. If you guys have tuned in the last few months, we've touched on some of the most hot topics in the industry, and really some of the, a common theme amongst conversations that I've been having with dealers and integrators and installers across the entire low voltage industry. I've heard a lot of common themes. So we've talked a little bit about business solutions, cutting down business expenditures. We've talked about some of those bigger threats and the highest changing rate of technology or of employment in our industry right now. When we decided to talk about liability and risk, I was really grateful to have the ESA network and be able to reach out to Crystal and to be able to reach out to Ken because they really are the biggest voices and the leading experts in talking about these topics. So talking about risk, contracts, liability, coverage. So I really want to highlight their conversations. I'm just going to be the mediator here and bring up some questions that I've had a lot of company owners ask me in recent history here. So without further ado, I want to kind of get into the next slide and start touching a little bit on risk and liability. Now, Crystal, I wanted to ask you specifically, when we talk about what these company owners should be looking out for, what they should be looking at their contracts or their current coverage for, and I asked you to bring to the table, you know, a few risks that you're seeing some of these industry owners, company owners dealing with. Are these all the way across the board? Is every company in this space dealing with the same risks and liability, or is this where they need to sit down with their insurance broker or agent and really look at what their company's needs are?
Thank you, Sophia, and thank you, Jillian, as well. I think really it's both. It's really two sides of it. One is certainly there's commonalities amongst the industry as a whole, where if you're doing installation or you're doing monitoring, you know, you have similar exposures certainly, but no two companies run their business exactly the same way, and that's something that has to be taken into consideration. And so certainly the exposures can change as a result of how you're managing your day-to-day operations, how you're dealing with your employees, you know, the types of services that you're marketing, that you're providing, et cetera. So I think it's always a good idea to sit down with your insurance professional every year that you come up for renewal and go through that process. I know so many people like the concept about automatic renewals because it's just out of sight, out of mind, I'm done with it, but really it does a disservice. Because you could have potentially have changed what you're doing throughout the year, and those conversations need to come to light, and your insurance professional should be able to guide you through that and help you think about those exposures more broadly.
That makes a lot of sense, and that really speaks to the conversations I've had lately with other companies that are starting to ebb and flow into different markets and to different spaces in the industry, whether it's, you know, going from strictly being residential to including commercial, or, you know, now touching into fire. So those, I guess those different liabilities and risks are going to change, and they're kind of concerned that their contracts or their insurance isn't covering them. So definitely let's move on to your slide, and I'll kind of let you take it away in talking about some of those key risks.
Yeah, absolutely. And, you know, and thank you everybody for attending the webinar today. Certainly appreciate it. It shows your dedication to your business and your dedication to the industry as well. So greatly appreciate it. Today we're more going very high level overview. You know, when we tend to go in depth, it can take hours, and I don't think anybody likes insurance that much except maybe me. So we'll make sure to keep it high level here. So when I'm typically breaking down risks, the main areas that I like to look at are your risks affiliated with your customers, your risks affiliated with your employees, and while this might seem a bit odd, your risks affiliated with cyber, because that really affects both customers and your business as a whole. And so I really like to separate that risk out. And so when we're looking at the first two areas, customers and employees, these are where people really get it for the most part. When you're looking at customer exposures, you're really looking at two sets of coverage that you generally have to carry, and that's your general liability and your professional liability. The problem is here is a lot of people take a look at this and they're questioning, why do I need to carry both? And you know, there's a very distinct, I would love to say that there's a very distinct difference between the two. And coverage-wise, yes, there is, but exposure-wise is actually a fairly gray area. But general liability, from general perspective, is intended to cover damage arising from damages arising from physical damage. That's from stuff you do in your day-to-day operations. But professional liability is intended to cover damages arising from negligence. So what we can do is kind of break down the difference between general liability and professional liability and why we really need both coverages. So if we can jump to the next slide, Sophia. Oh, sorry, go back one, my bad. So on the general liability, I guess if we look at what is a claim that's intended to be covered by general liability, that's your contractor, that's your installer who's at somebody's facility and they've drilled a hole through a water line. The water line needs to be fixed, the water needs to be cleaned up. You basically, you had immediate physical damage as a result of the services that you're performing at the location. General liability can also mean a slip and fall at your own physical location. If you have a storefront, somebody slips and falls, that's a general liability claim. Where we get into the gray area is really with the professional liability aspect of things. And on that, you know, it could be where somebody says, you know, you have consulted me here and said I need to put up cameras in these spaces, and they happen to have a break-in and the camera is not on the space in which a break-in happened. Therefore, they lose values or valuable items. And that's going to be more about negligence, because it's about the consulting side of things. It's about you being seen as an expert, and therefore your standard of care is a lot higher legally than just somebody off the street saying, yeah, throw a camera up, you know. You are being sought as an expert in your industry, and therefore if your advice to the customer is faulty somehow, or you know it just doesn't work out in their favor, then ultimately that's where your professional liability comes in. So in just a couple of other things that I'd like to hit on professional, a lot of people will have a separate policy for both. They'll have a general liability policy and they'll have a professional liability policy. And when I first started in insurance, I thought that was how it was all supposed to be. Every single exposure needs its own policy because that's how you get the broadest coverage. But really, when it comes to what you guys are doing as alarm contractors, there is such a gray area between your general liability exposure and your professional liability exposure that it makes much more sense for that to be on a single policy. Not only the gray area being a reason, but also typically professional liability policies are considered claims made and reported policies. Not to get too much insurance nerd up in here, but on that, with a claims made and reported policy, the claim itself, meaning them coming against you for the damages that were caused, has to be made against you and reported during the policy period. And the wrongful act itself, meaning the action that you committed that led to the damages, has to be committed on or after what's called a retroactive date. Whereas an occurrence policy, which is standard for general liability, always the policy that applies, it goes back to the date of the wrongful act. And so it's really important for those two concepts to align, those two policies to align. So if you can have a general liability policy that has professional liability coverage and they're both occurrence, that's your more ideal situation. So I always caution people when they have a standalone professional liability policy, we really have to focus on what type of coverage that is, because it's also not as simple as moving from a claims made and reported policy to an occurrence policy either. And a good insurance professional will sit down with you and explain, you know, what the implications are of making that change if you have two standalone policies. But you are always best just to have, being alarm contractors, being that type of unique exposure, you're better to have them both under one.
Now, I do have one question, and yeah. I want to bring Ken on this, because this seems to me, you're also getting into the fine print of your contracts. And one thing that I've heard, or that's been the question that's been asked, you know, what if you're going into a home or a business and there's already an existing system, and you're either working on that system or removing it, and then there's damages or something happens. So how do you protect yourself from a contracts perspective in conjunction with your liability coverage, Ken?
Okay, first I want to offer some clarification, everyone listening. Crystal uses the term general liability and professional liability. So I more routinely use the term errors and omission coverage, and that would be the equivalent of the professional liability policy. So it's the E&O that I always refer to is on top of the general liability. Let me explain the real distinction between the two. As you see from the slide, general liability requires typically physical damage or personal injury, one or the other. When the claims reps get the claim that you've sent to them, they ask, what's the date of the injury and what property damage or personal injury was suffered? When you say to them, well, it was a burglary, Well, okay, that's theft. That's loss of inventory, loss of product, whatever. That there's no physical loss, there's no personal injury. You're not going to be covered for this claim. That's when the E&O kicks in. The errors and omission is essentially the professional liability that you have for failing to have your system operating as, unfortunately, the customer expects it to. Okay, that's the issue. So the E&O is an absolute must for alarm industry operators and businesses. I use the term so that we're very clear on my terminology. When I talk about the alarm industry, I am positively including access control, cameras, fire, security, environmental, any type of security or fire type of detection equipment is covered. And you need the general liability and you need the E&O policy. And just to cut to the quick, you can't get it from any decent insurance company unless you have proper contracts. And the simple reason for that is they understand the risks that you are undertaking in the security or fire industry, and they need to be insulated. Their insulation comes from your contract with your customer, which is what creates your duty and your responsibility and the expectations of customers, so that when they determine whether they're going to underwrite you and what they're going to charge you for underwriting you, one of the first things they're looking at is your contracts that you use. The next thing they might look at is your loss run. Where have you been before you came to them? What type of lawsuits have you encountered in the past? They want to consider that. They also, of course, want to consider the size of your company, how much work you do, so that they can determine what premium they're going to charge you. Before I conclude on this topic, I just want to touch on one other thing. Who are we actually talking to? Are we talking to companies that sell 500 to 1,000 new accounts a month? Or are we talking to customers, alarm companies that add one customer a month or two customers a month? Maybe they've only got 100 customers altogether. Maybe they're just getting started in this business. Maybe the 100 jobs they put on a year are $100,000 plus jobs, as opposed to $99 and $16 a month to monitor. Here's the key, though. The damages and the risk that you take, rather, the risk that you take, that any security or fire company takes, are the same. Yes, if you install 1,000 accounts, you might have 1,000 more opportunities to suffer the loss, but it's only the one loss that you need in order for you to need to look to your insurance company, hope that you're covered, hope that you're carrying enough coverage to insulate you from a claim. Chances are you're not, especially if you're installing fire. And that's why you need to look to a company that offers you more than $1 million coverage, because that's just the basic coverage you might need. And so if you have one account or thousands of accounts, you still run the risk of the exposure of something going wrong with that account. You don't know which account it's going to be. It's usually the account that gave you a hard time with the contract when you went to sell it, okay? That's the one who you may hear from. That's what I think Crystal was expressing to you. So I'm going to give it back to you now.
That's great, Ken. Thanks. All right, Crystal, I'll move on to the next one for you. Oh, you're still muted.
Yes, I'm
There
mute.
you go.
Thank you, and thank you, Ken, for your input on there.
You know, before Crystal, if I may, I just want to say something, because I'm going to forget it otherwise. I want everyone listening to understand something else, which I know is very, very dear to all their hearts, okay? A lot of guys are, a lot of companies are listening to the webinar or think about insurance, and they don't want to think about insurance, and they don't want to think about their risk, and they don't want to think about losing their company, and they don't want to think about paying their premiums, because it's never going to happen to them, because they got a great relationship with their customers. They do the best job in the world. They never do anything wrong. They've been in business 100 years, and they've never been sued. All that could be true. But so you may never suffer a loss, which is great for you. But let me tell you why you need not only the proper contracts, but the proper insurance, because when you go to sell your business, this is what you're going to be asked. Let me see your contracts, and who's your insurance company? They want to know. They want to make sure that they are not buying a headache from you. And that has a direct correlation to how much they're willing to pay you. If there's going to be potential headache, the price goes down. So what I'm saying to you is proper contract, proper insurance equals more equity for your business, the very same accounts you have, more equity, more value. And that's what is important to all of you, because all of you think about, what's my company really worth? When can I sell it? What can I get? Okay? Instead of going to sleep at night thinking about who's going to sue me tomorrow. Okay? These are two issues that go hand in hand. Sorry, go ahead.
No, you're good. Absolutely, absolutely agree 100%. And funny enough, we actually see that on a regular basis where we have insureds who are purchasing other companies, and the first thing that they do is they forward us their contracts and say, here's a sample of the contracts that they're utilizing. What do you guys think? Should we be taking on this exposure? You know, and they do want to know if you have insurance in place, because ultimately a company is looking to buy your assets, not your liabilities. So that is, thank you, Ken, for that point. It is a very big deal. The second set of risk that I like to talk to people about is the risk affiliated with their employees. Now, everybody knows that generally they should be carrying workers' comp coverage. You know, that's covering employee injuries, statutory liabilities that you have, and depending upon where you're at, also the negligence affiliated with that. So if your employee sues you as a result of their injuries. Standard work comp has two parts. It has the first part that covers the employee for all the injuries, and then it has the part two, which is the employer's liability, and that is covering those lawsuits. If you're in a monopolistic state, there are 4 of them, then you will have to purchase that part 2 separately. So monopolistic states require you to purchase work comp coverage from a state-funded program. That state-funded program is only covering part 1. So just keep that in mind if you're in one of those states. But also, when you're looking at comp coverage, make sure that you're addressing both part 1 and part 2, because part 2 is extremely important. You know, you have a duty as an employer to your employees to provide them with a safe working environment. And if you fail to do so, that's where the negligence is going to fall. Secondarily is something that I feel like is somewhat underrated. For a lot of companies, they don't think about it necessarily, is the employee benefits liability. So if you're providing your employees with benefits, whether it's something that they're paying for or you're paying for, whether partial or in full, the administration that you do affiliated with that program, you have a liability that exists as a result of that. If you fail to name somebody on a health insurance policy or a life insurance policy, or you fail to act upon a qualifying event, you could be sued as a result of that and suffer a loss also. Even if you have a company that does your benefits administration, you still have to communicate with them. You still have an exposure there. It might be less than somebody who's doing their own benefit admin, but at the end of the day, the exposure is still there.
And I think, Crystal, too, you talked on a couple different points that seems to kind of span different areas of this industry, with states having different requirements or regulations. You know, we see that too with training and licensing requirements and state guidelines for technical expertise. And I think that's one thing that Ken in the past has talked about in his webinars as well, is really keeping your ear to the ground and being aware of what your state licensing requirements are, so that you are basically not in default. And those things don't just affect, you know, going out and actually doing the jobs and installing and reaching the consumers, but also making sure that your company is in compliance and meeting the needs of your policy, or meeting the standards across the board. And that goes from state by state, sometimes county by county. That's one great thing about ESA too, and a member benefit. You know, we provide a state licensing guide for all the training and licensing requirements state by state. So making sure that you are connected, whether it's with your insurance provider, whether it's with your you know, legal representative in the security industry, and using Ken services, or knowing what those technical expertise license requirements are. Making sure you're tapped into that network and keeping up with it regularly. Those state licensing requirements change, I know, from a training perspective. Crystal, do they change as far as coverage goes, and liability and workers' comp? Do those state requirements change at all?
Yeah, absolutely. Every you know, when you're looking at insurance coverage and what you're required to carry, you're having to look at your contractual requirements, you're having to look at the state requirements, and you're also needing to look as a whole at your own business needs. So it's more than just simply about meeting those obligations that you have, but it's meeting the actual needs of your business as well. Something to add on from the comp standpoint is ensuring that people you are doing business with, if you're using subcontractors, ensuring that they have work comp coverage in place. You know, a fancy new word that's really come to light a little bit more this year than maybe in years past, although it's existed, is something called an action over claim. And it's basically where a subcontractor is suing you for their injuries. And so one of the ways in which you can perhaps not prevent it, but help to mitigate some of that potential liability is ensuring that they're carrying the appropriate coverages as well.
Something that should be pointed out here also is when you contract with your subscribers, with your customers, a lot of you are forced to use the customer agreement, what we'll call the vendor agreement. Invariably there's insurance requirements in those agreements. A lot of them get sent to me to look at, negotiate, etc. But the insurance provision needs to go to your broker. You need to make sure that you're covered and you're carrying the types of insurance that agreement calls for. You need to get a clear understanding from either your broker or if you're dealing directly with the carrier, that you're going to be covered, and you're going to be, if required, you're going to be naming the subscriber, sometimes others, as additional insured. And you need to be very careful about that when you're using other contract forms. When you're using your own contract forms, there is no insurance requirement that you'll have, that imposed by contract, that is. And so you don't have to worry about it. But if you're signing other contracts, you really need to be careful about what you are agreeing to when it comes to what insurance you intend to carry. And you need to carry whatever you've contracted to carry, because if you don't, you're in breach of contract and the customer won't have to pay you. So keep that in mind.
The next section of exposure that I'd like to talk about is cyber. Time and time again, I just hear the same thing. My company's not big enough. You know, it won't happen to me. It's the same stuff that Ken was talking about earlier with regards to general liability. Only we hear it a ton with respect to cyber coverage. And honestly, it's a bit of a shame, because from an affordability standpoint and the coverage that you get out of it, it makes financial sense. You know, when we developed this line of coverage on Security America, that was our biggest thing, is understanding that these are you know, we have small business owners and we have large business owners, and we want to make sure that what we're doing makes financial sense and provides a huge benefit to our members at the end of the day. So many times, every time I hear that, oh, I don't need it, it's not going to happen to me, I just cringe just a little bit, because it is so very necessary. You know, from an exposure perspective, there is one cyber attack every 39 seconds. Every 39 seconds. Cyber attack, cyber theft has outgrown physical theft in the past decade. So for 10 years, cyber theft has been your primary exposure other than physical theft. Physical theft is not your biggest exposure anymore. It is cyber theft. And it's more than just about your customer data. Yes, that is a huge exposure. You do have rules underneath the law that require notifications, that require you to do monitoring if your customer data is exposed. And so many people, this is why they say, oh, I don't need it. I don't keep credit cards on file. That's the number one thing I get all the time. It is more than just about credit card data. You could not keep their credit card data, but the amount of data you keep on hand could be recognized as personally identifiable information, and therefore you have an obligation under the rules.
Well,
but more than that,
let me point something out, Chris. If I can point something out, the cyber attack that there's potential for is that technology now permits remote access into systems, so through the internet, and apparently, and I'm not an expert in this, apparently the access that is afforded sometimes through the security equipment will permit access into customers' general servers and files, and that can cause the loss of data. So I guess coincidentally, because this has become a topic, I would say towards the end of this year, the 2020 updated contracts now include a provision which offers cyber security, and it basically says to the customer, you know, if you want us to give you cyber security and encryption security, click the sign here, and you're going to pay for it on a monthly basis. And almost all alarm companies are going to have to look to outsource the cybersecurity companies that do offer this kind of service. So in recognition of this something that should be offered to customers, we have included it. We haven't seen it. It's not popular yet, I'm sure. It's good that it's important that Security America is offering this kind of coverage to the alarm company, because this is another source of loss, of potential loss, where the customer can sue. And if you don't have Security America, you're liable to find out that your general liability, any policy does not cover cyber loss. So it's a very important issue. And Security America, if they're smart, which I think they are, should be looking for that cybersecurity paragraph in my contracts.
And that's a great point. And I might actually skip the next few slides so we can touch on this a little bit more, because the cybersecurity coverage and the services provided if you do have a breach through Security America are extensive. I mean, Chris will get into it, because you guys provide, cyber forensics to go in and figure out, right, where the hack or where the breach came from. You guys provide legal counsel, correct? And how far does that go for a company who potentially had a breach?
It goes pretty far. I would like to, I just taking a quick step back. Cyber coverage is something that's been, excuse me, in the insurance industry for quite some time. I actually started writing cyber insurance back in 2004. But it really has only been in the last 10 years that it's come to be something that's actually sought after. And obviously because our exposures are changing daily, absolutely 100% daily. They actually say that the malware now, there's like in 2018, like 140 million different new versions of malware were created. New, that's not including existing, 140 million. In addition, those malwares are actually ever changing. Think about the flu virus. You know how they struggle to find the right strain every year for the vaccine? Same thing, because it's ever evolving. It's this growing organism basically, and malware is the exact same way. You know, so I think the greatest thing that comes with our coverage is the expert advice. So the company who backs our product is called Beasley, and Beasley was the pioneer of cyber coverage. And so the experts that they have at our fingertips, at our insurance fingertips, are extremely versed. And so they'll come in and they'll review your system, see where the breach happened, help you to build better security around your system, help you through the event. And it's just, it's a huge magnitude. And yes, there's legal advice under there, there's forensics, there's customer help as well. So if you do have some type of actual data breach where customers' data was released, they have an expert that they can talk to. So you as a business owner are not having, think about it, if you have 100 customers and you have to send out an announcement, how many do you think are going to call you in one day? Do you really want to take 100 phone calls in a day to talk about what happened? That's where the services that come with the program would also be helpful, is because they'll be able to open up a customer hotline basically and take those calls, and customers are able to speak with an expert who knows the actual physical details of the breach itself. And I think we have to think more outside of just simply people getting our customer data. We also have to think about the fact that we're not just looking at that. We're not looking at breaches. We're looking at ransomware. We are looking at cryptojacking, which is where somebody is basically harnessing your computer power to mine cryptocurrencies. And so you won't even know anything is happening in the background. Just all of a sudden, your systems are going to be shutting down and you're losing time. So outside of loss of data, having to pay for, customer credit monitoring, having to deal with any type of ransomware events, you lose time, valuable time. We actually have a customer who had an event, and it was a year, and it was unfortunately before they had purchased coverage, but it was a year and a half, 2 years later, and they were still trying to recover files. And
Wow.
So every time a customer come up, they'd try and have to rebuild their entire file. And that's another thing that the expert services help you with, is how do you back up your systems appropriately so that if this does happen again, which is likely, because they say it's 50% of all devices that have been infected get infected again within 1 year.
Wow.
So it is very likely once it happens to you that it will happen again, and they can help you, the experts can help you put in the mechanics to, if it does happen, that it can be a lot easier to deal with.
Wow, that's extensive. So we've kind of, we're pushing time, and I want to make sure that we leave some time open. No, you're fine. No, I mean, it's fascinating, and I know that people are really interested. But I want to make sure to leave it open for Q&A at the end. Ken, let's kind of get into some contracts. You mentioned a little bit earlier, some distinctions, some of the verbiage that you use. I follow your blog, and it is overwhelming, the amount of response and ongoing discussion that is happening. So this is something that is super important, obviously, to companies in our industry. So I was looking through some of your information, some of your literature. You speak on some of the issues a potential alarm company, and as you mentioned earlier, you're including in that description and low voltage company, so whether it's access control, CCTV, get into some of those things for me real quick, what those issues are for those company owners that you're seeing from the contractual and legal standpoint.
Well, I think that you first start with the issue that courts and the law in all the different states will enforce the alarm contract. The alarm contract is essential to adding insulation from claims, not only where you've breached the contract, but where you're negligent. So although a lot of attorneys, judges, they think of, can you get off the hook? Can you avoid liability if you're negligent? Well, the answer is yes, but you need to contract it. You need to be under contract to avoid it. And why you need it, especially in the security industry or fire industry. Fire is a good example. You install a fire alarm system. It's designed for detection only, of course. You don't have any fire suppression or preventative equipment installed. It's merely a detection, and you're charging even $100 a month for it, whatever you're getting, and for one reason or another, the alarm doesn't signal the central station, or the central station doesn't get to the fire department, or the fire department doesn't get there fast enough, and fast enough can be very subjective. Maybe it takes them 5 minutes, maybe it takes them 2 minutes, maybe it takes them 1 minute. But the damage that occurs ends up burning the building down or causing substantial damage in that building. It turns out it's a $50 million building. And maybe with the tenant damages inside, it runs into the hundreds of millions of dollars. Maybe there's loss of life or personal injuries as a result of this fire. The exposure is absolutely enormous. If the customer, what I call the subscriber, has the expectation going into the relationship with you, the alarm company, that you are there to prevent loss by fire or smoke or resulting water damage, even to put the fire out, you're going to get sued no matter what happens. I don't care how efficient your alarm was. If there's a loss, they're going to come after you, especially if the loss is big enough. And the same thing goes with security. Usually you know who you're insuring. I mean, you know the difference between a barber shop and a jewelry store. You know the difference between a restaurant, perhaps, and a place that has high value inventory or equipment stored in it. But the price of the alarm is the same, pretty much. Maybe one system's more extensive than the other, but pretty close in price. But the exposure to you is a lot different. As soon as you realize that the difference in expectation is really all that matters, and no matter what you do, the customer is always going to think that you are there to prevent loss. You understand that you're there to detect it and hopefully reduce the loss, and that's exactly what the contract calls for. One of the differences between the standard forms that we sell is that they're clearly written. I think it's important. I think it's important for customers to know, be able to read the contract and understand it. If you and you need to understand it. I don't want you to explain it, but I want you to understand it. Because if you can't read it and understand it, then neither can your customer. And all I can say about some of these provisions that are in the contract, keep in mind that there's a big difference between not being able to understand it and not liking it. Your customer could not like it, that's fine, but that's the deal. If you decide to back off on certain provisions, then you're reducing the protective value of your contract, and you're increasing the risks of your carrier, who's there to back you up when you have a loss. And believe me, your carrier is not going to tolerate too many losses where you've abrogated your rights by changing your contract provisions. So I'm not sure if Sophie was asking me this part, but there are a number of protective provisions in the contracts. They have been fairly consistent, but we've undergone some changes, some modifications. Each year we refine them based upon case law and some legal reasoning that might come out in one case or another throughout the country. But essentially, we start with the exculpatory clause, which says you have no liability for any loss except, well, by law, you're always going to be liable for gross negligence and willful misconduct. But other than that, no liability for breach of contract and ordinary negligence. Then you have the limitation liability clause, which says that if you are found liable, your damages are going to be limited to a certain amount.
Mm-hmm.
There's an insurance procurement clause where customer is supposed to get you insurance and name you as an additional insured. Probably that's a good topic for Crystal on our next webinar. That could take the entire time to understand that.
This probably should have been like a 2 or 3 part series because there is just so much, and you guys really are in the middle of having the most knowledge and expertise. So really, I'm sure we could have probably unfolded this into a many part series. So I hate to even skip the slides. I do want to take a second to remind everybody that those who attended or even those that missed the webinar, I know we kind of had this at an odd time. We wanted to schedule this, for those that were attending ISC East last week and still not hit too close to the holidays. We will be sending out this recording to you guys. So those slides that we did miss, you'll get to see them, and I will be providing contact information for all 3 of us, so you can ask any questions. But we will open up for Q&A. If y'all want to start sending in your questions now, so when we get through these next few slides, we'll have a good list. That would be great. So definitely, as we move through, to start filling in your questions, that'd be awesome. Now, I mentioned it in the beginning. What is this symbiotic relationship between insurance and contracts, and specifically Security America and Ken Kirschenbaum contracts? I've heard some of your underwriters, Crystal, and I've heard you as well, mention how you write or quote a policy for a company owner if they have Ken's contract. So what does it do exactly?
Honestly, the most basic response I can give is that it makes my life easier. We know that Ken's contracts have all of the necessary provisions that both protect the company as well as us. At the end of the day, there's always going to be things that aren't insurable. And therefore, having a contract in place not only protects us as the carrier, but also protects our insureds. And so I think it's really important to do that. But Ken's contracts being in place, I know they hit all the points. If they don't use Ken's contracts, that means I need to go in and I have to do a review of the contracts that they have in place. And I start, do they have a limitation of liability clause? What does their indemnification agreements look like? So there's a lot of work that has to go into reviewing those. But if we know that they're utilizing Ken's contracts, we know that that is truly the gold standard. That is the standard by which the industry operates. And because of that, they get a discount on their insurance. But yeah, in the most simplest terms, it makes my life very easy because we know what's in there.
That's great. And it's just funny because no matter who you talk to, and I've talked to many company owners and other industry professionals across, the entire United States, they mention those words specifically. Ken, your contracts are the gold standard. So you are a rock star by industry standards here. So again, it is a pleasure having you both on, and Ken, you as well. You mentioned earlier, when you talk about E&O coverage, and pairing that kind of like a wine, a fine wine with cheese. Do you kind of agree, that's how these contracts and then insurance really works together?
Well, I think I think there's something very significant about it that they need to consider. And that is, I'll say that the contract is the first layer of protection. The carrier, Security America, is your next layer. But I think you need to keep in mind that you can't just rely on your insurance coverage, because you're going to have claims that exceed that coverage. And you're going to have claims where you're going to want to rely on that contract, just like your carrier is going to want to rely on that contract. So you have to be diligent about that. I also want to warn you, most insurance companies will look at the contracts, and most underwriters won't know what they're looking at. So if they see a paragraph that's titled limitation of liability, that's it. They're done looking. It's the exculpatory clause. They're done looking. Well, guess what? Who says it's written properly? I had a contract review just today. Every day I have one. And the client wanted me to negotiate the contract with his customer, raised a couple of issues. One of the issues that they were raising was objecting to the limitation liability clause. And this is what I did. I wrote back to my client and I said, hey, this is not a provision from my contract. I can see it. For one thing, it says we're going to offer you a limitation of at least this amount or that amount, whichever's less. Okay. So if you see the word less in the limitation liability clause, it's not properly written. Simple as that. And so I said to him, you know what, I'm not even going to try negotiating this contract. Go get proper contracts and then send it to the customer, and then I'll negotiate that contract. And he did. Probably during this webinar, I probably sold him a whole set of contracts. Thank goodness.
I think that's a good point, Ken, is just that this is, and this will kind of tie in a bit about leveraging your ESA membership and leveraging the things that you have, is that your contracts, that if you're signing somebody else's contract, you absolutely have negotiating power. Don't feel like that is the end all be all. You have resources within this industry to have somebody look at that contract and help it be a bit more in your favor. We understand that at the end of the day, you know, we all have to do business. That's just a fact of what we do, right? But if you have a job or you are having to sign somebody else's contract, don't think that you have to simply accept what they're giving you. It is a starting point for negotiations, and utilize the resources that are given to you as a result of being a part of the ESA.
I'll jump in here too. I think we skipped over the slide. So Security America, it was created by ESA. We saw the need for an industry-specific insurance company. We saw our company owners struggling because their coverage, their policies were not including or really just being relevant to the work that they were doing for several, many reasons, and I'm sure some of you guys out there can relate. So Security America was created by ESA. I will clear up, you do not have to be an ESA member to have a Security America policy, but as an ESA member with a Security America policy, you are receiving a huge discount on your policy premiums by being a member. And 9 times out of 10, that is recovering your dues amount. I know Ken was asking me earlier and wanting me to clarify, okay, what people ask me about ESA, Ken was saying, is how much does it cost? And really what difference does it make in regards to my policy? And I could speak on that for days. I'm sure I'm probably a little bit biased, but I do have, some case studies, and I've talked to some company owners and seen that real hard number value behind being a member as far as the insurance coverage goes and that discount. Crystal, you're writing the policies and you're writing them with ESA member discounts. What have you seen? What are maybe some case studies or some testimonials that you can kind of speak to here?
Let's see. I think it was a year or two ago, actually at ESX, we managed to write a policy and save somebody $13,000. So there's significant things that are available. You know, obviously those are large companies, but even if you're looking at smaller companies, the way we talk about it is your premium difference is going to be approximately 20%. Versus member versus non-member. And normally the discount does cover your dues, but you have to think additionally all the other stuff that ESA is providing you with. You're getting discounts on Ken's contracts. You're getting discounts, you know, on stuff you use every single day. The member savings program is just absolutely phenomenal, and the cost savings that happen under there are amazing. So outside of, you know, if we look at the big accounts and those dollar figures, we save people some significant amounts of money. But even on our smaller guys, they're saving some money on their insurance. They're basically having their dues covered, and in addition, they're getting discounts on a ton of other stuff.
Well, yeah, and you touched on a point. Sorry, Ken. Let me bring up 1 second. Do company owners receive a discount on their policy for having Ken's contracts?
Absolutely.
Okay.
Absolutely, they do.
So then if you're an ESA member using Ken's contracts, you're getting a kind of 1-2 KO on your policy and the discounts and the amount of money you're saving, right? Yeah. Okay.
Absolutely. Absolutely.
Let me tell you why I recommend SAR as my first recommendation. Okay, Security America, and I don't have to go back last year. I can go back to just yesterday. Because I get these things on a daily basis, all week long, and it's really quite simple. So I'll mention again. Yes, you get an A+ carrier. They're backed by Lloyd's of London, so you have your A+ your A ratings. You can get the basic $1 million policy, and then you can get the $4 million excess. Crystal can get you excess over that $5 million coverage. And some of you, if you're in fire, you should get more than the $5 million. But your basic is the basic $1 million is really as much as most of you need, or a lot of you need. $5 million is certainly adequate for most companies. But let me tell you and you're going to get a good price. You're going to get a good premium. I don't know if it's cheaper than anyone else's. But it's competitive, and maybe it is cheaper than everyone else's. I'll leave that to Crystal. Now let me tell you what's really important. You're buying this insurance to protect you against claims. Don't forget that. And here's the difference between Security America and the other insurance companies, all the other insurance companies. Their claims department. It's headed by a claims administrator. I won't mention his name because I do mention it too often. Well, maybe I will. Bart is by far the most knowledgeable claims rep there is. And I'm just going to tell you what happened yesterday. I got a call from a lawyer handling a death case from another state, saying to me, could I help him out? Could I give him some information? Can I do blah, blah, blah? And I said to them, I should just help you out. Why don't you tell your carrier to hire me as a consultant, like a lot of other carriers do sometimes? And they said to me, I said, who's your carrier? And they told me, and it's one of my favorites. You guys know who they are. I said, are you kidding me? Just pay the claim. They are the dumbest bunch of claims reps I've ever met. They're going to tell you to pay the claim eventually, so save yourself the trouble and pay it now. Well, that's not something that I would say if the claim were being handled by Security America. Of course, I wouldn't have to. They would have already engaged me as the consultant, I hope. You hear that, Bart? But that really, when you get a claim, believe me, you're not going to be thinking about what premium you paid. You're going to be thinking about what coverage you have, and you're going to want to make sure that you're being taken care of, and that you have the confidence that the lawyer that they've hired and the claims department is standing behind you, and so that you are not going to feel that you have exposure well above the policy limits, because the claims are certainly going to be above the policy limits. Okay, sometimes you get, especially if personal injury is involved. So you're going to
Now,
see all kinds of.
Ken, real quick, I want to make sure I pose this question to you while I go through our contact information, guys. Y'all, thank you guys so much for staying tuned in. It's really great to have some people that are really interested in learning more about how to best cover their company and make sure that they are protected. So, Ken, real quick, I'm posing this question to you from someone who is attending. They did not quite catch your statement regarding indemnity in his closing statement. Did you state that we should always try to carve out indemnity for breach of contract?
I'm not sure I understand that question. The indemnity provision, I will say, is one that we very often have to give up. Crystal was mentioning how strong we should be in negotiating contracts sometimes, and every one of you has a situation like this where you want the job so bad you're going to agree to anything, and I can't hold you back. That's fine. Usually I tell people when we do that, I say, listen, cross your fingers and make sure you call your insurance broker and make sure you're carrying sufficient coverage for the claim that's going to come in, because you might need it. And so that's what's important. As far as indemnity, so the indemnity is really for the carrier to some extent. There are 5 or so protective provisions in the contract. Indemnity is one of them. We can give up 1 or 2. We have to keep the others. And you need to know what you can give up and what you need to keep. And it's beyond today's webinar. And it's actually something that you really need to be calling me for anyway to negotiate it out. Have it checked.
Yeah, absolutely. So Ken, and I hate to cut you off. If you guys have any more questions that you want to be answered, go ahead and shoot them. I went through all of the contact information. You're definitely more than welcome to reply to my email. I'll be sending out the recordings. So, if you guys watch it again and still have more questions, that's the great, the great thing about being a part of ESA. We make the connection and have that network to provide you guys with any answers to any questions you guys may have. I thank everybody for attending. Thank you guys so much. Thank you, Crystal. Thank you, Ken, for taking the time out of your day. I hope everybody has a great Thanksgiving holiday week. Ken and Crystal, you both as well. If you guys have any closing statements you want to leave, that'd be wonderful as well.
I have one. Now,
Hit me with
everyone
it,
out there, make sure you give Crystal and me 5 stars so they invite us back.
Yeah, that's
Happy holidays.
No, I think the only thing that I'd like to close with is just a thank you to Jillian and Sofia for putting this together, and then also a thank you to the attendees for sticking with us. I know these are very invigorating conversations we tend to have about this, and it's the stuff nobody really wants to talk about, but I think it's absolutely necessary that we talk about it. And the last thing I will close with, I was able to pull up our savings report from October, and actually we saved members $41,000 in the month of October. And the non-members that joined the insurance program but didn't get membership actually could have saved about $10,000. So there's really big savings potentials on the insurance. But again, I always push not just the insurance. The ESA provides you guys with so many benefits. There's so much out there. So reach out to Sofia. Contract questions, certainly reach out to Ken. And we stand by what he does, and he certainly is an expert. And we take everything that he says to heart for sure. So appreciate everybody and have a great Thanksgiving.
Yeah, thanks guys. You can get a Security America quote free, no obligation. We can absolutely run that with what your amount would be with membership. They can also run that amount and to include the Ken Kirschenbaum contract discount. So we can always take a look at that hard number value, see if any of the other benefits are also relevant to you guys. Absolutely no obligation. We're just here to really help your business and help you run more efficiently and allow you guys the opportunity to reinvest the money you save back into your company. So again, thank you guys for sticking with us. Y'all have been great. I appreciate it.
All right. Thank you, Sophia.
Thanks, guys.
Bye, everybody.